Yo, what's going on, guys? It's Alex with Finite to Freedom. Welcome back. It's Sunday. I hope everyone has had a fantastic weekend so far. And today I decided to make four videos. Four videos about economical depression and what is it about the stock market and how it can affect it, economical recession, economical recession, and the same reasons, how it can affect the stock market and what is it about, the repo market, and gold and silver. So these are going to be four videos. So what I would suggest is consider yourself to subscribe, and let me come back actually on the main screen first. There we go. So we can have like the guy opening the doors for us. So you can see here already that I have written down all the things that we are going to discuss in these four videos. So consider yourself to subscribe and turn on the bell notification so you can actually watch when the rest of the videos are coming on YouTube to be updated with it. And now, if you think that it is going to have value, because I do think, and it has valued a lot my journey, not only about investing, but in general, my life journey. So these things are really valuable, and it has great information. It explains what is it and how it can affect the stock market and everything we do. So if you do think that is going to have value, I'm going to leave it up to you guys. But if you do, then consider yourself to hit the like button down below the video and help me out with this, because when we reach to 100 likes on the video, then YouTube is suggesting it to wider audience and more people can actually see it, and hopefully it helps them with the journey. So apologies about that. So let's jump straight away. What is economical depression? Now, I want to put that out that I've done my research, I've gathered information, I've seen podcasts, and one of the greatest podcasts I've seen is from Robert. I always don't. 1 second, I'll find the name. Kiyosaki. So Robert Kiyosaki has mentioned it before, that he hopes he's wrong, but he thinks that we are going into a global depression. What is it about? More people are more depressed, unemployment rates are higher, jobs lost, and debt and everything, right? So it can affect the stock market as well. We've seen USA is in debt massively. They are more than $34 trillion debt. China is in debt. Europe is in debt. Japan is in debt. Australia has a recession after 30 years, right? So things are not looking great. And I'm worrying about. I'm worrying about, because the information I found, they are worrying, and that's the debt that every country is, right? So the global economy is not great. So let's dive in a little bit into the what is it about. So in this video, we're going to discuss about the economical depression, and on the next video is going to be about the economical recession. So what is it, economical depression? In the stock market, the depression isn't a formal financial term, but refers to the broader economic concept of a severe and prolonged downturn in economic activity, often signaled by a drastic and sustained drop in stock prices and other asset values. This contrasts with a recession. We're going to discuss what is a recession, but this is the extreme one, and that's why I'm putting it first. So, which is a less severe and shorter period of economic decline. A market depression is characterized by widespread financial distress, mass unemployment, business failures, and a general loss of investor and consumer confidence, as seen during the Great Depression of the 1930s. We had a crash in 2008. 100 years ago, UK had a crash, but it wasn't affecting massively, right? Now, America can affect massively the stock market, China, Japan, everything. And nowadays, right? Because we've got social media and everything, right? So the news are widespread. Back then, 1930s, it wasn't, that massively as it could be at this time. So I don't know when, so I can't give specifically a time for it, but I think Robert was right because he has been in the past right. He has studied about sales and he has studied about real estate. So the guy knows what he's actually doing. And from other podcasts, he has mentioned why are we saving money when they are printing money? And right now, America is printing loads of money. So I think they printed like 200 billions of dollars in a week or so, something like that. And why would you want to put that debt? Because it is debt. Who's gonna pay? The taxpayers are gonna pay, right? Pensions are gonna pay. Um, Everything. Unemployment rate is higher. Unemployment claims are higher. A lot of things are not looking good. So, the key characteristics: severe and prolonged downturn. A depression is an extreme recession lasting for an extended period and characterized by a substantial decline in economic activity. Again, guys, I'm only providing the information that has helped, and I have changed my strategy currently right now about the stock market. So I'm going to refer about that when we are going to discuss about gold and silver and what was my mistake at that time 3 years ago. So, significant stock market decline. Stock market values plummet dramatically and for a prolonged period, reflecting deep economic problems and a loss of investor confidence. There is no confidence out there. There is a lot of uncertainty. There is greed, which is not good. So a lot of things play a massive role into the investment journey, right? And especially the economy of countries. It plays massive role. So mass unemployment, widespread layoffs, and a huge spike in unemployment are hallmarks of a depression as companies cut costs and production, business and banking failures. Numerous businesses go bankrupt and banks may fail due to widespread default and a lack of confidence in the financial system. I hope everything makes sense so far. They are really valuable information. Loss of wealth. Investors, including individuals and institutions, suffer significant losses of wealth due to plummeting asset values. So, why did Warren Buffett took money away from stock market and he put them into silver? So I think he put like around 15 million, 35 million, something like that, if the numbers were correct. So what does he know? Why did he go away of the market? If we are so bullish, why is he taking the money off, right? So you can see the why. The 1929 stock market crash. The Wall Street crash of 1929 is a prime example of an event that triggered a depression. The crash wiped out billions in wealth, causing a sudden decrease in consumer spending. It set off a chain reaction of banking failures, forced businesses to close and lay off workers. So more jobs were lost, right? Because the businesses have to protect their company, and signaled the start of the Great Depression, a truly severe and prolonged economic downturn. Distinction from recession, severity. A depression is significantly more severe and devastating than a recession. We're going to discuss on the next video about recession again, guys, and I'm going to let you know a little bit about the stock market between January and April, what we have seen. So, duration. Depressions are long lasting, while recessions are shorter periods of economic slowdown. And the scope, the economic and social impacts of a depression are far more widespread and profound, affecting nearly everyone, right? And this is my concern. If we end up into a global depression, things are gonna be rough. Like, we haven't experienced that before, and it's going to be for the first time as a globe depression. So I'm going to present you guys here the diagram. You can see the US national debt over time, and it's more than 34 trillion dollars. I lost because it's a big number. So I'm trying to imagine it and I can't. So right now it said in January 2025 it was raised to 36.1 trillion, and I found out that we went a little bit down by 2 trillion. So currently we are at above 34 trillion dollars USA in debt. Now you can imagine, if USA is in that debt, China is in debt, Italy is in debt, UK is in debt, Greece is in debt, Australia, every country right now is in debt, and that makes the global economy worse. So here you go, guys. This is a short version video. It's only 19 minutes, so you can hear everything that it says and get that as an information. Everything I say is no financial advice, so I don't want to sound pessimistic, but I'm prepared if that happens as much as I can, actually, because you can't be fully prepared on something like that, right? Because I don't know if I'll have a job tomorrow, if I'll have food on my table. And that's why I said that I'm grateful every single day for three things: the roof above my head, the food on my table, and my job. If you have these three things, you can survive. If you don't, it throws you off balance. So I hope you find this video really, really important. Now, if you want to be tuned for the next one, turn on the notification bell so you can receive the notification that the next video is uploaded. And also consider yourself subscribed. So I'm going to leave you with this. I'm going to see you on our next video, which is about economical recession. Until then, guys, take care of yourselves, have a good night, and I'll see you back then. Bye bye.